Hey guys, it's Tom Albrecht here with the A team at Remax First in Calgary. I'm a specialist buyer's agent and I help people buy houses. My wife Brianna helps people sell in the Calgary area. And I also have a master's in economics from Oxford University. So I thought I'd jump in here and just talk a little bit about the market in broad terms, like what's been going on. We had an interview with Global News earlier today, and the reporter was asking just asking a million questions about the market. Inventory's up 70%. Is it turning into a buyer's market? Was kind of part of it. And it was interesting because I think the actual news was that it's not really news. It's that the market is balancing in general terms. Apartments may be a little bit different, but certainly freehold properties. We don't have evidence to say that we're entering into a buyer's market. At least I don't see that evidence. So, and I think I think something to know about markets is they tend to balance, right? That is what they do, is they tend towards that equilibrium, because when prices are high, sellers come on and demand comes off. When prices are low, sellers come off and demand comes on. So there's going to be a price that causes that equilibrium in the numbers of properties that are being transacted. And so that was one of my sort of bigger points. Was like, hey, maybe it's kind of no news. And I think that is ultimately my view. I mean, there is news, of course, that we've shifted from, I hate to use the word shift, everyone's using it right now, but from, obviously it was a seller's market for really three and a half years. And during that period, obviously values of all different property types rose rapidly. And you got this growing sense that we were part of this, becoming once again part of this Canadian housing crisis, we call it, where we've got expensive housing in Toronto, Vancouver, and Calgary, and I think there is an element of that transition actually still going on, because Calgary is such a livable, wonderful city, but prices are still relatively low. So that being said, a lot of new listings have come on over the last two and a half years. Every month for the last 30 months, you've seen that number go up. So what I'm talking about is the rate of new listings. So, it might be, 3,000, and it was up 5% compared to the same month the previous year. And it's really been doing that for two and a half years. And so, that's lots of new listings. And that's really but what's been driving it. People making those decisions on the margin. I'm not going to keep my house when I buy a bigger one. I'm just going to sell it. I'm not going to rent it because, for whatever reasons. And so what are the reasons? Well, prices are up, rates are still high. That causes builders to build. That causes retirees to retire early. That causes people who are moving up to sell that old property of theirs as opposed to rent it. Rents have fallen, so that's going to cause, they've fallen about 8% over the last 12 months, and similar for the previous. And so then on the margin, people just kind of make that decision. I just rent it. I'm going to take my win. I'm risk averse. So I'm just going to take the money, and then real estate oftentimes is a leveraged investment. So I'll just take the cash, close my mortgage, and put that somewhere else. And those are the decisions I think people have been making on the seller side. I don't think there's been any kind of sort of panic at all. Or we've not witnessed any panic anecdotally. More on that later. But so that's kind of what's been happening on the supply side. And on the demand side, there's plenty of demand. There's still way more people buying houses each month now than there was pre-COVID. The cat is out of the bag, and people are still continuing to move to Calgary. But demand isn't even people who are moving now so much as people who have moved recently, and they've been in rentals or whatnot. And after 1, 2, 3 years in Alberta or even Canada, they're purchasing. So demand is down year over year a little bit, as it was last year as well, but it's still super high, and so those two effects, though, demand coming off a little bit and supply coming on in large numbers, has caused the total number of units to quote unquote surge, right? So there was maybe 3,000 homes on the market at one point last year versus 5,500 at one point this year. And so that's the news story that people are looking for. It's like, wow, surge in inventory. But when you actually think about it, that's awesome. That's like saying, wow, I've got 4 times more Mars bars. Awesome, you've got 4 Mars bars because you had 1 before. It doesn't mean you have a lot of Mars bars, right? So So I don't think the story is as impressive as it might sound as a headline. So anyway, we were talking to the reporter, and it was really great. You got to watch the report tonight, and I'll post the link there. But it was really balanced. It's like moved it into a balanced market. Now, of course, with apartments, it's a whole different story. Yes, apartments are definitely in a buyer's market. The slight buyer's market, just bigger picture. Prices are falling and have fallen. But even with apartments, I will say the rate of new listings for apartments was down this last month, so in August compared to August of last year, for the first time. And in fact, the total number of new listings in the market, that dominated. So it was such a big drop in the rate of new listings this August versus last August that it actually affected the total number of new listings for the whole market. And so actually, for the first time in about 30 months, the rate of new listings decreased, versus the same month of the previous year. So that's kind of interesting. And I think that's really clear evidence that the market is in a balancing pattern. We'll have to wait and see. Is it going to be the same? And it looks, so far this month in September, we've got the similar trend. But give it another couple of months, and is that a trend? And if so, there you go. Bob's your uncle. You're balanced now. And I think that's probably the most likely outcome for freehold. I see lots of people moving up. I see lots and lots of demand, lots of Calgarians with good incomes and wealth from various sources, one of them being equity growth. And I see lots of money moving here as well. So people with money. So I think ultimately you have to convince me that we're going to move from a seller's to a buyer's market. It's like, okay, well, what's the driver? What's the cause? And it has to be something usually pretty big to cause that, right? And it has to cause that real fear and uncertainty. And I don't think we have that. I don't think we have Trump uncertainty. People are nervous, so what they're doing, buyers are delaying their purchase into the future. But I don't think people are saying, I'm not going to buy. I just don't see that. I don't see that at all. They're just, I've got a lot of people, by the way, pent up demand, who've reached out, who want to buy, and they're just doing market research, thinking, waiting. We're not really seeing places, and that's fine, and depending on their situations, like I encourage people to take their time in a balanced market. Why rush? But I would also say to anyone who's thinking about buying that herd behavior is a real thing, and it's definitely a realtor pet peeve that we sit around eating bonbons a bit. Well, we don't. I'm really busy, but everyone, like next spring or the spring after, whatever, everyone's gonna be like, right, I gotta buy, and you'll read headlines that things are going up like 1% a month again, and it's just like, guys, it's like, what were we thinking? We should have been accumulating while it was flattened out. So this all depends on your own risk aversity, what you think of the market. I always encourage people to do a lot of internal reflection when they're thinking about real estate, because you got me, you got your parents, you've got a million realtors and financial advisors. So listen to everyone, but most importantly, listen to your gut and think about what sort of a future you think Calgary has. As a place with really strong fundamentals from years of education, human capital, institutions, proximity mountains, the political system, justice, all of it. Like, it's all pretty positive. Like, it's pretty sweet, actually, when you compare that to a lot of places in the world. And that's where that money's coming from. Nigeria, Iran, on and on and on. So, one difference is we're in a big field, as compared to Toronto and Vancouver. So that's something to think about. And I think economic geography really matters in Calgary. Like, where are we buying? Is it right next to sources of employment? And as Calgary continues to grow, once we get to 2.5, 3 million people, eventually in the next 10, 20, 25 years, where are those bottlenecks going to be for geography, for like driving and whatnot? But where's the value? Where's the cultural stuff we want to be near? So I'm just hinting here. You have to figure it out yourself or call me. But I do think geography matters in Calgary, because we probably want to be away from a lot of new construction if we want to be on that bandwagon of equity growth, appreciation, and over the long run. That's my take anyway. So anyway, where does all this leave us? Well, we are apparently in a balanced market. It's going to stay that way. And so what are you going to see? Well, you're going to see well-priced listings come on and sell right away. So if you're a buyer, you're going to be kind of on it because the better quality, lower priced ones sell. And then you're going to see the opposite. Think other ones won't sell at all. They might stay on the same price, expire after 90 days. And there's all kinds of things that might happen in between. And you'll see people drop their prices. That doesn't mean the values are falling. That means they started too high and their value of their home is the same. They just have to go out to get to it before they sell. So you'll see that in the marketplace. And you'll see, especially this, you'll see a lot of seasonality as usual. So this time of year, you'll see a lot of expiring and terminated listings. So that's kind of interesting. And then you'll see, seasoned veterans who've been through it all tell you that it's all pretty standard stuff, right? Like, we've been in a real buyer's market. Brianna and I worked in Fort McMurray from 2014 to 2020, when we still operate up there, actually. But during that and I'm happy to say that the market is doing great. But during the 2014 to 2020 period, prices fell, a lot, from 750,000 to 380,000 for a detached home. And we've seen that sadness and that fear and uncertainty. And, in buyers markets like that, when the ground falls and, the whole economic structure changes, sellers say sell and they'll do what it takes. And they if they can, they will sell and they'll just keep doing it. But in a normal balanced market, which is what we're in, 1 out of every 2 people who list their home doesn't actually want to sell it. So they just like, whatever, I'll just try my best. And so we encourage those people to actually just not to list their homes. But anyway, that's just normal buyer's market stuff. And so then what will you see next? Well, if unless there's some kind of economic global meltdown, I think the next leg ultimately will be up, especially in the better areas and the better product types for, no competition. So detached, semi-detached, followed by townhomes in, the more central or western or great subdivisions in even suburban areas. You're going to do great and it's going to leg up. And so you probably want to do your move before that. At the moment, it's actually a really good time to move up. And that sounds like a cheeseball realtor thing to say, but I think it's true. We've got stability, so that allows you to negotiate contracts, on a house to purchase that where you get to sell your home and probably won't get bumped out of that contract, which is a really chill way to go about it. And so, obviously we don't know the future, but, it looks, unless something crazy happens, that's probably what it looks like. Stability, and then eventually rates fall again and people sort of realize, oh, my buddy's buying a house, I should buy one, and then off you go again, because fundamentally Calgary's in a really good spot. So that's me. I kind of put it out there, say what I think, I guess. And I just think it's also interesting. Like we have a bunch of realtors, our number one realtors from across the country, write a market report for us called the Insider Market Report, and I'll post a link to that as well. So please check that out. We've got AI summaries for each province, and you'll see that like Atlantic Canada, the prairies, are generally doing okay or even quite well, whereas parts of BC and Ontario are less so. And it's price stupid, right? Like it's high price markets, high rates, and uncertainty. You're going to see less demand. Whereas in people are migrating still to those lower price markets, and I think that's insightful. And I think I'll also post a link to ATB's most latest economic report for Alberta, predicting 2.1% growth next year, and they're usually pretty right on. Their only headwind really was the Trump stuff, whereas the rest of it, like, it looks good, right? So other links I might post to the market report itself. I wrote a report this month. And I'll also pop a few charts up. I did some charts, so it's just some 10-year price and inventory charts. So I'm going to post a blog to those, and I'll post a link to that in the video as well. So if you enjoyed the comments, if you enjoyed the content, please write a comment, ask your questions. Feel free to reach out, subscribe if you don't mind as well, and. I just really appreciate you watching, and hope you have a wonderful fall and housing market, good times. Thank you very much. Have a good one. Oh, and Sarah, this is for you.